when I started working with Richard, my I guess dream and vision was sort of formulated out of observing the lack of financial inclusion in many regions. So individuals who maybe had some basic transactional capability through M-Pesa in Kenya, but really didn't have the luxury of many of the services that we just take for granted in the global north. And that was really the trigger point. And then, even when I come on board and observed the opportunities in the global north, my eyes went open around the possibilities of just being your own bank, and that's being in control of your own financials. Now, there's versions of that, from having everything on your ledger to what hopefully we might want to talk about today. And I think it has been moving. When I joined Richard in the early days, it was just, I've got Bitcoin on my ledger. Now there's so much more we can do and can imagine that might work, that we can possibly create the next Wise or Revolut. And Rob in particular, who's ex-Revolut, will know exactly what we need to do. But basically, today and in our portfolio, we have everything that I think is needed, right? We have the ramps, we have liquidity providers, we have stablecoin issuers, we have DeFi yield providers, we have cards that are connected to wallets, we have orchestrators of everything, we have virtual accounts. What more is needed? I mean, maybe I'll start with you, Marcos, if you don't mind first introducing yourself, and then what is your flame, what's your vision, and then you take over. What else is needed? What can you imagine a world where you string all this stuff together? And does it solve this sort of global account that I think most people are wanting, right? We don't want to be KYC'd in every country. So over to you.
Yeah, thank you very much, Anil. Hi, everyone. Good afternoon. So my name is Marcos, founder of ValoX, which is basically a B2B business for anyone that wants to compete with Wise and Revolut. So please ping us, because that's how we're positioning ourselves. I've been in payments for some time, and I share the dream. How do we basically leverage what has been built by the great companies in the past, but how do we stop building on top of each other and passing this cost to the consumer? Because at the end of the day, you have this merchant discount rate of 3%, 2%, can go up to 10% depending on the country. And obviously this has a direct impact in a local GDP. So you need to kind of reset. There's no way to reset. Let's just throw all the systems in the trash. No managers, no CEOs. Let's just have agents. I'm inspired by that panel. But I think you need some sort of a bridge to that world, and it starts with optimizing on top of this existing, but at the same time not pushing, again, more costs. So what is the next generation, and why do we need Onchain for that? There's lots of ways to interact with the consumer these days. And when we have MasterCard and Visa in terms of infrastructure, they gave us the access or the trust to move funds from one country to the other when we're traveling. But now with this on-chain mechanism, we can actually provide these global accounts all over. So I do a KYC with some sub, and then I connect this customer with IDOS, and then suddenly I don't have to do KYC again for that customer, or I can actually help another company to have access to that KYC. And the same goes for accounts. So I can open an account in the UK, but if I'm connected to a partner in LATAM, I can actually provide access or entry points to those accounts. So you kind of lose this boundary of the country problem.
Maybe it's worth highlighting, for those who don't know, how a Wise solves for that today, because that's the big difference.
Wise basically did a very smart way of moving funds globally. In fact, it's a bit of an arbitrage. They don't move the funds, or they move only when needed to net off balances. So if a user sends money from UK to US, not necessarily that money is going to the US, but at the end of the day, you will have the cutting time of movement. Whereas on chain, everything happens.
So it means that they need to have operations and accounts and globally in the world. Yeah,
correct. Yeah. So you kind of need licenses to do this business. You have tons of thousands of people operating behind the scenes. And what you're doing now, you kind of have, I can explain this in a very simple way. The previous business that I found, we were running a account structure, card issuance in 40 countries with 12 people. And we're probably more secure in terms of, or we understand more the user behavior in terms of transaction, the majority of the banks out there. So I think there's so many ways to build this on top of this legacy that we no longer need to be dependent on this infrastructure.
So the future looks interesting and ripe. Axel?
With humans.
You obviously are very active in working with a number of on-chain wallets with a vision to move to this sort of complete neobanking. First of all, introduce yourself, what your company does, why it's exciting, but then maybe comment on what you see in your pipeline, like who's doing some interesting stuff. Is it all talk, or is there real action happening?
Yeah, so Axel Cateland, founder of Kulipa. What we do, and sorry, full disclosure, ex-MasterCard. And we do card issuance for self-custodial wallets. So at the end of the day, we enable people to pay in crypto from their self-custodial wallet wherever Visa, MasterCard are accepted. And what we see happening in the world is, so it started with self-custodial wallet wanted to enable their users to pay in crypto because the off-ramp was a bit painful. But more and more we see native fintechs, crypto-native fintechs doing payroll, doing remittance, who just use the blockchain and stablecoin as the backbone of their use case. They don't ever issue fiat accounts. They only issue a wallet, and we enable them to plug this wallet into the local economy with the card. And something which I was expecting to happen in a couple of years, which is like, it feels weird to say it, but traditional fintechs, the fintechs of 5 years ago, are now moving in that direction too and starting to expand into new geographies through blockchain and through stablecoin. So they are regulated, they have their own. I'm going to take an example. I used to work for Spendesk, spend management platform in Europe. One of the big pain is if they have a customer who has a subsidiary in Israel, they can't give them the same spend management tool in Israel because they're not regulated in Israel. What they can do nowadays is give them a stablecoin wallet in Israel with a card, and people can suddenly start using the same tool across the world with and without issuing them a bank account or a current account. They just issue them a self-custodial wallet, and this is happening now. It's not. I was expecting it to take a bit longer, but everything is accelerating. So that's how on-chain banking is somehow giving the capacity to hold dollars and euros and currency on chain anywhere and move it across the globe in a few seconds for a very cheap amount of money.
And if I may, I'm going to add on an extra question here to you. Is the end goal here to just replicate what exists today in terms of, okay, I've got a wallet and I've got a card and I can spend, and then that money will be, go to a fiat account? Or what does the world look like if actually the settlement end of the spectrum is not off-chain?
No, and that's exactly where the fact that everybody gets connected on-chain through this movement of money that's why it becomes interesting, because the fact that we can now send the money across to the merchant on Onchain in stablecoin, then the merchant doesn't have to put it back into their bank account. They can just use it to pay their suppliers across the globe with an on-chain payment. So the whole idea is the current state is what we call the stablecoin sandwich. So you're on ramp, you move it with stablecoin, and you're off ramp. But that's because people are still used to hold fiat. But more and more the companies and people, especially in emerging markets, will get used to have their money into a wallet, and because. And I mean, we are very pushing really hard in Argentina, in Nigeria, where people cannot get a euro or USD account. The way they hold stable currency is through stable coins, and in that case, the merchants don't want to put their money back into peso. They're going to keep it in a USDC or USDT or whatever wallet, and pay their suppliers in China in USDC or USDT or in stablecoin. And that network is going to more and more stay on chain and be way more efficient globally.
Over to you, Saumitra. First of all, thank you for stepping up and replacing your CEO. You're doing a good job so far. He's busy closing a round, so I gave him an exception. So if you don't mind introducing yourself and talking a little bit about what Fiat Republic does, but then I want you to think about, I mean, ultimately I know what Fiat Republic does. You enable banking, right? But so I want you to be, first of all, a little bit more philosophical, which is, are we really talking about banking here, like from what people understand banking to be in this room, or are we talking about something else? Can the two terms ever really mean the same thing? And then, in order for that to happen, like, where does compliance and, because that's my favorite topic, as everyone knows from the prior panel, where does that fit into all this? Do these entities need to be compliant and regulated, or what?
Absolutely. Hi, everyone. I'm Saumitra. I'm the head of product at Fiat Republic. What we do is we provide banking rails to crypto companies, to crypto retailers, exchanges, liquidity providers, and we provide we source these banking rails from our banking partners, and in turn, what we do is we provide them compliance information on behalf of our clients, the crypto companies, and their customers in a neatly packaged format, which essentially means that the banks can meet their regulatory requirements of understanding who the counterparties are, who the customers are in a transaction. The crypto companies have a way for their customers to on and off ramp. But also, as was pointed out, there is the possibility of making internal ledger transfers. So an exchange looking to pay, let's say, a liquidity provider to source Bitcoins or USDC at a short order, that's definitely a possibility on Fiat Republic. Specifically, in response to your question, I have a very strange contrarian view.
Good.
So does Adam.
Good.
As to what on-chain banking actually is. We believe that on-chain is essentially, I suppose, a delivery mechanism. The bank is the institution that actually stands for accountability and responsibility towards their customers. Ultimately, should something go wrong, there needs to be an entity, an institution that is actually looking to provide services to their customers, help and support in a legal and regulatory framework. To give a simple example, a friend's wallet got drained, a couple of years ago as part of a smart contract exploit, right? So should that situation happen, how do we safeguard the consumer's interest? Because ultimately, for mass adoption to happen, we need to ensure that the product that's being created can cater to the needs of your average consumer who does not perhaps have the same level of technical capabilities that people in this audience might have.
So what's the solution?
I think the solution, I would say, is, as again Marcus pointed out, a bridge, right? So a straight-up transition, burning down the old world and then recreating the new one in a day, that doesn't really, that kind of change, that rapid change, could actually be counterproductive. So what might be the opportunity here is, a company like Fiat Republic, shameless plugging, but of course, acting as a bridge between the old world, the traditional banks, understanding their setup, their compliance requirements, but also catering to the needs of the new age, innovative on-chain companies looking to create newer and more exciting payment methods. So I think that's a solution, a bridge. There's tremendous potential to keep the innovators free to innovate and keep the bankers occupied with compliance, so that we sort of take care of the interchange in the middle, sort of almost like a translator.
Got it. I'm going to move, finally, last but not least, Rob. I want to turn the conversation a little bit more to the technical side. You and your team have been building like laser fast, and it's really impressive. But it's very true Revolut style, I think, is fair to say. Talk us first of all, introduce yourself, what your company's doing, but then talk us a little bit through about what's the stack that you're building for this new world. What are the key components that need to be in place? What's missing or what's wrong with what we have today? And what would you change if you had a clean piece of paper?
Thanks, Anil. Hi, everyone. I'm Rob. I'm one of the co-founders at Do Network. We're a stablecoin payment company that is enabling business and individuals to have borderless accounts, seamless and instant cross-border payments, and an ability to access different types of dollars, different fiat currencies and stablecoins, all at once through one interface, whether it's a web app, mobile app, or an API. So previously I was at Revolut, and I think what we're doing as an industry as a whole, and I guess my colleagues here as well, we're essentially unbundling the whole neobanking stack into composable pieces. So something that was previously done by a bank fully vertically integrated, and Revolut is one of those banks that actually built most of the stack themselves. Maybe initially they had some modules that they introduced through third parties, but usually they build everything. Now, today we have parts of the stack that are built by different providers, and a lot of the stack is actually open source. And the core one of it is actually the ledger. So previously, every bank or e-money institution had their ledgers closed loop. Today, we can use Ethereum, Starknet, Near, etc., all of these different blockchains as the source of truth for your balances and for your assets that you hold. Then you have the other parts that are, I guess, very mature. So the wallet infrastructure, we have a lot of providers that can give you an ability to create wallets. And we are using some of them as well. There's this AML piece that I think is also quite mature with providers like SumSub that Marcos mentioned, and Elliptic Chainalysis, that a lot of people think that blockchain is this black box and you don't know what's happening, but actually you can see the source of funds for all the transactions, you can see the destination of funds. It's very transparent. It's actually much more transparent than the banking system. So these parts are already quite mature. Then there are things that are currently emerging, and I think this is where we come and play, is what Marcos called bridges, which includes things like on-off ramps and like banking rails, but also includes liquidity networks. So you need to be able to move money across the border in different stable currencies or fiat, and you need liquidity. 2-3 years ago, when we first talked to Anil, it didn't exist, right? There was no much liquidity. It was just emerging. Today, there's like giants like Circle just did an IPO that can mint and burn stablecoins across the world. There's like huge liquidity providers all around the world. In every region, we see there is a big market maker or exchange that can convert your stablecoin to local currency or vice versa. So this part is emerging right now, and I think what we're going to see soon is that stablecoins are also going to be on-chain across different currencies. You're going to have your stable peso, stable NGN, stable Brazilian real, and you will be able to essentially swap these things on-chain without really going necessarily to the banks. and you will only need to go to the banks when you need to pay taxes, or let's say in cases when you need to go there. But right now we're in this kind of intermediary state. And I think there are pieces that are like still people are trying to tackle, and Julian is one of them, is like identity and privacy. I think those two pieces are still not cracked. I think identity is somewhat there. We're getting there to build decentralized identity so that we can share the KYC between us, but the privacy piece where we can make it compliant but still allow you to not show your competitors your revenue. This is the hard part that I haven't seen anybody solve yet. I mean, there were some, privacy blockchain, fully homomorphic encryption ideas, etc., but nothing that is commercially used today. I think these are kind of the major components that we see. Some of them we built ourselves, some of them we work with colleagues here.
We've got a few more minutes left, and I want to throw sort of an open question to anyone who has a view, because I don't. But one thing that comes to my mind when I think of banking is not just the things that we've been talking about today, which is like access to payment rails and accounts and cards and yield. We didn't speak too much about yield, but I think anyone with a DeFi background knows that's part and parcel. The one thing that people want banks for is credit. And it's not clear to me how an on-chain bank solves that. Has anyone got ideas, thoughts, anything? It's very experimental.
Yeah, we do. We do have some. You have lending protocols, and I think it depends what you mean with credit. Is it a collateralized credit or is it a risk credit? I think what banks do in most cases is non-collateralized. They take a risk and they measure the risk before they give the liquidity. I think that will still require the same level of technicity in terms of risk scoring and things like that. What we can already do is collateralized credit, where you, because people, some people do have assets that are on chain, and that where they can put that collateral as on chain and get liquidity for it, because they don't want to sell their assets, but they still want the liquidity, and that's we are working on some of these products, creating credit cards that are going to be backed by lending protocols. So that's there. I think the banks will still have a role to play, or they will need to be. We need to invent a way to risk score people if we want to do non-collateralized credit, and that's still to be created, I think.
I think for risk credit or uncollateralized or under-collateralized credit, we need regulatory framework across pretty much every jurisdiction, because I think the biggest problem for uncollateralized credit is that you need to have a way to enforce collections, right? You need to be able to collect these payments. And I think that's the biggest thing that is missing here, because technically there's no problem in building a programmatic smart contract that would essentially collect payments from your wallet, etc. But in case if your wallet is empty at a certain point in time, what do you do in that case? We need governments to essentially ensure the institutions, credit institutions can collect these payments. I think that's the biggest gap.
I'm going to go the other direction, because I think we have sufficient regulation for everything that we're doing in payments and banking. This is just a technology revolution behind the scenes, rather than actually the way you do stuff. Underwriting, I think there's lots of, Nubank is a great example of a business that grew to 100 million plus customers, providing, small ticket credit, less than $1,000. I think it was $200 on average. And that was a use case, like 95% of the people would pay back, 5% wouldn't. But the spread was bigger, and therefore they kind of managed to build this 100 million customers business. So I think the interesting aspect of credit that I'm not seeing yet, and I think stable will enable, is basically this cross-country credit. Like I'm able to put a deposit in dollar and get the yield from the US, or be underwritten by a business in the US, leveraging partnerships in Europe. So leveraging someone's license, like BIN sponsorship, like this partner relationship in licensing.
I know we're out of time, but I can ask you a different question.
Sure.
Which is a last question just for you. The other thing that sort of comes to mind in building all of this is liquidity. So Circle does provide liquidity, clearly, but it's one player, or maybe two with Tether. I'm curious as to how Fiat Republic, which is clearly trying to build a network of participants,
Yep.
how you see solving some of this.
So there's a couple of ways to do it. One is by ensuring that we have liquidity in the different currencies that are available on our platform, and making sure that the participants of this Fiat Republic network, it's called LegalNet, we give them enough incentive to keep their funds locked down with us, which essentially means that they need to be able to pay. Whoever they need to pay needs to be available on this network, so they can make a payment. So there is an internal ledger movement, but there is no real fiat movement from the liquidity leaving our platform. And more liquidity on our platform would essentially mean that more of our members and their use cases can be met. And that's essentially our play.
Yeah, and before Silvergate went down, they had a pretty big US network doing this very profitably.
Precisely.
So it's nice to see you've copied that model. Great, so these gentlemen will also be here for the rest of the evening, I'm hoping. So if you want to talk cards linked to wallets, whether those are centralized wallets, digital wallets, or self-custody wallets, Axel's your man. If you want to talk about money movement, orchestration, emerging markets to developed markets, or developed markets, go talk to Jew at Rob. If you want to talk about how to rebuild your banking infrastructure or create a neobank with an on-chain ledger, go talk to Marcos at ValoX. And if you want to talk about EagleNet or liquidity or banking rails or compliance and making a bridge to this new world, come talk to this gentleman here from Fiat Republic. Thank you very much.
Thank you so much, Anil. We're going to do one